One silent trend happening in Malaysia is the privatization of a handful of very large companies that are showing signs that they don't really believe in the Malaysian stock market anymore, or maybe they don't like the investors here, or they don't see the vision, right? So 4 months ago, we actually talked a lot about, we made a prediction, right? We think that based on Q2's happenings, Q3 and Q4 will be experiencing a more privatizations and delistings. And so far, that's actually coming true, right?
Yes, exactly. And we're going to be going through a few companies that is going through some sort of like corporate exercise. So the first one, which a lot of people have been talking about, it is Genting. So Genting Malaysia is set for delisting as Genting Berhad plans to take over this company, and they offer a 2 ringgit and 35 cents a share to minority shareholders. So since they announced this, Genting Malaysia share price went up about 7%. And also Genting Berhad, this one went up even more. It's about 11% because many of these institution investors who invested in Genting Malaysia right now, they are rotating their fund into Genting Berhad instead because of this privatization. But there's a lot of unhappy investors as well because they are saying that they are trying to take over at a very low price.
Well,
it's a low balling game.
That's a word people are using, right? What's the word? Unfair but reasonable.
Yes, unfair but reasonable. Exactly. Very confusing.
But I can explain, right? So it's unfair
to the
because you compare to maybe IPO or like past price 10 years ago, right? It's not as good. But it's reasonable because it's above the current share price.
Yeah.
There's a premium.
Small little premium, like 10%. But yeah, so this is happening with Genting. Whether you like it or not, anyhow, I think this deal is most likely going to go through. So if you still want to own Genting Malaysia, well, you can do that by buying Genting Berhad. That's assuming if you would like to own their business. But that being said, also Genting, there is a lot of debt that they have. I can believe the debt level is actually 3 times more or 3 times bigger than their current market cap of about 13 billion. And there's a lot of like deals that they need to like go through. So they are trying to bid for a license in the US to get a new resort. So that one, they are still trying to like compete on that. And then there's also a few more things, which is their drug company, which is X. That one is related to the Alzheimer drug, and also a couple of more other stuff that they are trying to go through. So those are the risks. And before you invest in Genting, make sure you know about this thing. Right?
Okay, next company is Yinson. So this one is quite simple.
Yes.
They may not say it, but I think they have very little patience for Malaysian investors who do not understand how they manage capital and why they need a high debt level and why that's actually good for investors. But despite, the share price going up so much, rewarding long-term shareholders, a big chunk of the existing investment community is still not convinced.
Yeah.
And that's why they plan to delist and I believe release somewhere else.
Yes, correct. So they're trying to IPO in the US market where they think that the market will appreciate them even more. So anyhow, Yinson is going to be getting privatized at around like a 9 billion in market cap. So if you translate it into per share basis, it's going to be around like 2 ringgit and 79 cents per share. So the closing price was 2 ringgit and 40 cents. So another 10% up. But one sad thing about Yinson is that for the past 5 years, it's only up like 17%. And this is despite the fact that they actually managed to grow their earnings to as big as, 4x. So yeah, the market didn't appreciate them. So I think Yinson also had it enough already. So they decided to just take it private. But that's still on talks. We still don't know whether it will go through or not. Yeah, and who knows, maybe analysts will come out again and say it's unreasonable but fair again. As usual, they'll use this kind of like term to justify that this takeover is fair. The third company over here is Scientex. So this Scientex privatization has been ongoing for a couple of years already. Scientex initially got, raised this kind of like takeover offer 4 years ago at around 1 ringgit and 50 cents. But that didn't go through because the two largest shareholder, which is Samarang and the other foreign investors, they basically say that they don't want. But recently, they decided to just let it go. And they actually have been disposing of their shares to Scientex, I believe. But anyhow, they say that they want to take over Scientex packaging, but hard at around 1 ringgit and 50 cents. So you can see that there is still some sort of like a mini upside. But it's still on talks. We still don't know whether they are going to be like buying or not. But so far, it seems like quite promising. And if you look at Scientex Berhad, right, ever since they say that they want to take Scientex into private, the share price actually went up about 19%. So that's a huge bump. And if you look at Scientex, it's actually still pretty decent company. Earnings have been growing, although it's like a very tiny one, very small. But it's thanks to their property development kind of like business.
Very stable company, like I would say they are semi-conglomerate. Yes, there are multiple businesses, but really it's two. big ones.
Yes,
They're
exactly.
largest in this space. They're pretty much, they're level 99 character in plastic packaging already, right? So
Yes.
that's why they are going into elsewhere.
Yeah, and also if you look at Scientex earnings and revenue, it has actually going down. So I believe that's the reason why the major shareholders or the foreign shareholders, they decided to just let them take over. And they did mention that they want to reduce a lot of these compliance costs that is have to do with the being listed. So once they go privatize it, I think there's a lot of costs that they can cut, and hopefully they can improve the operation efficiency of Scientex. And last but not least over here, this is not a confirm, but there is a news or speculation that has been ongoing. That is PNB is trying to take Velesto private after Velesto say that they want to pay a lot of dividends out. Yeah. So this is a very interesting timing. I mean, when Velesto has been loss-making for the past, I think, 5 years already. And recently, they managed to turn around things because they focus on projects that generates them cash flow. They pay down all of their debts, and right now they just own the 5, and it's basically zero debt. And not on top of that, they also can get a lot of this cash flow that is coming in from their contracts. And also, the management say that they want to pay out 100% of their cash flow back to the shareholders. So it seems like a lot of positive things that is happening. And then suddenly PNB came into the news and said that, you know what, I'm going to take you private.
Got it.
Yeah, but so far the share price has been going up, which means that maybe PNB might need to take this company private at a much more premium valuation as compared to the previous companies that we mentioned. So yeah, hopefully they will buying it at a premium. So just now we mentioned, you can see that last time they are all in the red, and then recently they only make a lot of money in terms of profit and even cash flow. Dividends also has been rising. Last time they just pay one time 25 cents, 0.25 cents a share. Then that grew to 1.25 cents a share, and that grew to 0.75, but we haven't know about the next upcoming dividend payout. A lot of speculation say that they might be paying like another 1 cent, or maybe it could be 2 cents. So yeah, it so far looks pretty decent for Velesto. So the reason why companies want to take them private, obviously, number one is to get control, and also there's less compliance cost. In the case for Genting, I think there's like an interview with the management team. Basically, they say that in order to get the license in the US, right, they need to have some sort of like a ownership in Genting Malaysia. So I think it's like more than 50%. So that's the reason why they want to take control of Genting Malaysia, so that their bidding process will be much more convincing. Yeah, so that's the first one. I don't know whether is it true or not. It could be not. And the second one, which is less compliance cost, this one is have to do with Scientex. So they say that they want to improve the operation efficiency for Scientex, and also because there's a lot of like listing compliance thing that they need to go through, so they want to cut that. But the second thing is the market didn't appreciate them.
Yinson.
Yeah, that is Yinson. For so many years already, they have been growing their earnings, cash flow, and they are growing their contract also. And so far, they have been doing a very good job. I mean, in terms of execution, most of their services, they are all doing it on time. It's like they didn't really like go beyond their schedule, right? But yet the market still didn't like buy it up. So that's why they decided to, you know what, since you're giving me at a very low price, you didn't appreciate me, so I'm just going to take over this company. And last but not least, maybe they might take over this company at cheap price and potentially release it at a premium. So this is evident for MMC Port. So last time they took it private at about 6 billion in terms of market value, and recently there is discussion that say that they want to release again in Bursa, and they're planning to release at 21 to 30 billion 4 years later. So that's like 3x to 4x.
This is the classic Maxis play.
Yeah.
Maxis, when they had the Bangladesh subsidiary, then they delist, and then when they relist in Malaysia in early 2010s, I think, the thing was missing. So that could be something that Genting want to do as well.
Yeah, possibly, if that is one of their cards, right? Because we never know what they plan to do.
Exactly.
But yeah, those are the 3 potential reasons why companies decide to private their companies. So the final thoughts is whether this is a good or bad thing. For some, obviously, it's good. So for instance, like Scientex. This one, I think that one is decent thing because they want to cut a lot of costs.
Yinson is good for Yinson.
Yes, Yinson is good for Yinson. I think we also cannot blame them for taking private since the market didn't beat them. I think the bad thing, it is probably like the MMC Corp.
Yeah, we don't want that kind of situation. But
Yes.
again, we don't know, which company is like that, right? We don't want to assume.
Yes, correct.
But there is a chance that some of these companies are doing it.
Yeah, it's bad not because of the business is bad. It's bad because the valuation that you're going to be
Yeah.
paying up is going to be much more expensive in the next few years. So yeah, minority shareholders cannot enjoy the upside. The second thing, actually, the key to delisting is actually the best one is to delist out the bad apples and not the good ones. We have like 20%, our statistics that we have like compounded. So compounded, yeah. So it's about 20% of the Bursa Malaysia has been continuously reporting losses. So I think those are the companies that SC or Bursa should take note of and potentially delist them, or maybe even companies that just don't share out their cash to minority shareholders, those cash holders, right? So yeah, I think that should be the key in terms of privatization or delisting. But the third thing is that if let's say they can add value, then it definitely makes sense. Whether is it improving their profits for the parent company or helping them cut costs, or a lot of things that they can do. So prime example is the Scientex and Scipac acquisition. So yeah, those are our final thoughts about today's video.
So if you want to know all this, a lot of these things are already shared in our FIRL Pro group. If you are part of it, you are going to get model portfolios for you to refer to in terms of helping you with deciding what companies you would like to add into your own portfolio. If you want the write-ups of these companies, we also have it. It takes you 10 to 15 minutes to read. And if you want to get a taste of what it is inside, check out our free sample, which you can find in our free sample link. One example that we've been talking about a lot and we share with our members for over 3 years is Kellington Group Berhad. So yeah, guys, thanks for staying all the way until the end. I know this is like somewhat of a sad video because a lot of these good companies are delisting, but just wanted to share with you what's going on in Malaysia. Bye-bye.